Futures prop firms can be an amazing opportunity or a financial trap. It all depends on whether you understand the rules, the obvious ones and the sneaky ones. So, today I'm going to break down what prop firms are, how they work, the rules that trip traders up, and which ones I personally recommend. Prop firms fund traders with simulated capital. You trade under their rules, you pass an evaluation, you get a funded account. You keep a percentage of the profits that you earn. They take the risk, you follow the rules. Basically, they rent you borrowing power in exchange for discipline. Um, so, just to give you, I think, the simplest example or explanation, I have a $25,000 funded account with Take Profit Trader. I paid $90 for that account. It says it's a $25,000 account. It's not. It's really paying $90 to take a challenge and get $1,500 of drawdown. So you're paying $90 for $1,500 to trade with insane leverage. I could trade 3 minis on that. I don't, but I could. Who are prop firms good for? Prop firms are good for people who don't have the money to put into a brokerage account. If you don't have a few $1,000s to invest into your trading, you might have $90. Or in the case of Apex, you might have $30 to get going on one of their $25,000 eval accounts. So people with small account size, people who want to practice discipline with real stakes. It's a step higher than sim trading. You can make money. You're spending a bit of money, and if you want to keep it under control and not spend a lot of money on the prop firms, but you get some stakes and the potential to make money. People who can't stomach blowing the personal money. I wish I started on prop firms and trading small instead of starting with our life savings in a brokerage account and losing that. Traders still learning consistency. I think, as annoying as the prop firm rules are, they can really help us to become more disciplined, more consistent traders. And also, I think they're great for traders with a defined strategy and risk management. I didn't start trading prop firms with a defined strategy or risk management. I wish I had. Who they're not good for? Impulsive traders. Basically, this who they're not good for list is describing me, my first 2 years trading prop firms or year and a half trading prop firms. So they're not good for impulsive traders, people who overtrade, gamblers. I wasn't a gambler before, but I definitely became one trading prop firms. People who don't read rules. I knew the rules, so that wasn't a problem. The one thing, the one thing I did well, I could read the rules. And people who are chasing payouts without following a plan. Yeah, I definitely fell into all of those. Now I'm trying to be in the top category. That's the goal. Different prop firms have different rules, but the basic idea behind all of them is you pick an account size. I always go with the smallest one, the 25K account. If you're new, I suggest also going with the smallest account you can get. Then you hit a profit target. For the 25K, it's $1,500. You have to stay within the drawdown limits when you do that. Sometimes there's a minimum day rule that depends from prop firm to prop firm. The one I'm with, it's 5 days. So, you can pass and get a funded account within 5 days. Other ones don't have any restrictions and you can pass on day one. Topstep, it's 2 days. So it's kind of all over the place. And then you pass, you pay an activation fee, and you get a funded account. Sometimes you don't you don't pay an activation fee. Again, there's some differences there, but those are the basics of how it works. So for me, it was, a 2500 a $25,000 account with a $1,500 target and a $1,500 drawdown. So basically, it's just you have 5 days. You can take as long as you need. So there's that too. You don't have to do it in 5 days. You have a month before you rebill. So let's say you have a month to pass this before you pay any more money. So you have 1 month to get to $1,500 before losing $1,500. Okay, the rules. This is where things really differ between prop firms, and people feel pretty strongly about this rule, the intraday trailing drawdown. So, the apex style drawdown. Um, it's the most hated rule. It moves up with your unrealized profits. It basically makes it hard to hold your winners because if that goes against you, that's counting against your drawdown. I'll show you an example in the next one here. It can create premature exits. It can get you in a bad mindset of just like, "Oh, I'm 10 points in the money, just take the money, get out." You don't want that drawdown to work against you. It's very different from a static or end of day drawdown. I think the psychology trap on this one is you can think you're safe on a trade and then the stop kills your account. But someone I was talking to today about it who trades Apex, he said that he thinks that it's not really the trailing drawdown that's necessarily the problem, but it's people's emotions and how they trade around it. And I kind of am in agreement on that. Okay, so here's a quick breakdown of how the intraday trailing drawdown works. You have a trade, say you have a stop for 10 points. Your target's 20 points. So you're going for that 2 to 1. Price moves 15 points in your favor, and then it reverses and you get stopped out. So your trade lost 10 points, but because the drawdown trails to your highest point, you've actually lost 25 points of your drawdown. So that's how that works. And now you can see why it makes it so you want to kind of bail quickly on your winners and you don't want to let your winners run. The consistency rules are, I'd say, the second most hated rule after the trailing drawdown. Basically, what they say, and you need to check for each prop firm to see if they have them and what they are so that you know going in. Because some traders, this just will not work for your style and your strategy, and that's fine. There's other prop firms that don't have them. So you're not stuck with consistency rules. But basically, they're saying that your smallest stake can't be less than a certain percent, usually 20 to 30% of your biggest stake. This makes scaling harder. It punishes when you have that one big win. And um, it's not ideal for traders who like to scale into those A plus setups or those ones that are really going in their favor. Consistency is in the name. So just think of that. It's basically if you're with a firm that has these, you're going to be have to be consistent in the size that you're trading, and then also so in your position size, and also your trade, like in your profit targets. So if you're consistently taking 20 points for your profit target, you can't then have a 200-point winner. All right, I'll try to explain it a little bit better. We're going to use Apex for our example. So Apex's 30% consistency rule says that if you trade the required 10 days, this is in a funded account, not in the eval. You traded the required 10 days and made $1,950 total profit. Apex says that no single day can be more than 30% of that 1950, so 585. If your biggest day was $900, you fail the consistency rule, even though you followed every other rule. You can still get a payout, I believe, but you have to keep trading more days until that $900 fits into that consistency rule. So sometimes there are a minimum number of trading days in the eval and then also in the funded account. So for my take profit trader, it's 5 days in the eval. So I mean, I think that's perfectly reasonable. Some of them, like Topstep, it's only 2. Sometimes Apex has promotions where it's only 1. Sometimes in the funded account, you have to trade at least 5 days or at least 10 days. Again, that's all over the place. You need to just, I hate to say it again, read the rules for the prop firm that you're looking at because they are so all over the place and different on these rules. Payout rules are different for different prop firms. If you are looking at a prop firm and you think you want to go with them, just Google prop firms. So just Google take profit trader payout rules and take the time to read their payout rules. Um, some of them have delayed payout windows. Some of them require a minimum profit target daily to count towards your payout. Some limit the amount of the first payout. The profit splits are different. Uh, and they do drawdowns and buffers differently. So really just read the rules on the payouts. Some of the prop firms have activation fees and a lot of them are getting away from them, which is great because I personally hate them. It always felt like, great, I passed. And then you're rewarded with having to give the prop firm more money. I prefer to just do the $90 upfront with Take Profit Trader. And then when I passed, I didn't have to pay anything. I could just move it to my funded account. Um, these activation fees can become very expensive when you get to the stage where you're good at passing the evals, but then you quickly blow the funded account. So watch out for those. And again, they vary from prop firm to prop firm. So you need to read the rules. I think the theme of this video is just like, if you find a firm that you think you want to go with, go in and read the rules and be clear on everything before you go in so there's no surprises down the road. When you buy an eval with a prop account, you have an unlimited amount of time to pass that eval. So you don't have to pass it within the month. However, it rebills in a month. So we do tend to feel like we got to pass it within the month. Um, And this can really end up costing a lot of money, these rebills, if you go in buying more than one account and then now you're getting rebills on multiple accounts. So watch out for it. And this one can be a bad psychological trap when you get close to that rebill date, thinking, I'll go for it now and I'll pass it or else I'll lose it. And if I lose it, I'll just get a fresh reset on rebill. So just watch out for this one. I think the main psychological trap that you need to watch out for when you're trading prop firms is this one, the I'm so close trap. When you're so close to passing your eval, when you're close to getting past your buffer, or you're close to getting a payout, that's when you're really at risk of throwing your rules out the window to just impulsively take a trade to get to that point where you're so close. I've talked about it in other videos. People have told me in the comments that they've been a few dollars away from passing or a few dollars away from a payout and blown the account. So really watch out for this one. The other one is thinking that your funded account equals a paycheck. You need to trade small. It's not money yet. Just focus on keeping that account. And then another one can be feeling like you have to make money or you have to trade every single day. You don't need to be green every day. You just need to be consistent. This is the prop firm I use, Take Profit Trader. I still think they're the best. I talk to other people in the comment section and they say, check out these prop firms. And I have checked out a lot of them. And I keep coming back to that. I think Take Profit Trader is the best. The downsides of Take Profit Trader is the profit split at 80/20. But like I said, if you're not consistent yet, probably just ignore that profit split because if you do get consistent with them, you can go to another prop firm later with a better profit split if you're finding it to be an issue. Now, the one thing to watch out for with them is that on the eval, the drawdown is just end of day drawdown. But when you move into the funded account until you reach that buffer, it's the Apex style intraday trailing. So you need to be aware of that. I know people have been pretty upset with them when they don't know that going in and then they get burned by that intraday trailing drawdown. Aside from those two things, I really think they are the best. They don't have any consistency rules, they don't have any payout rules. It's literally just once you're above this buffer, you can transfer whatever amount of money that's above that over into your wallet with them. So, like, what I love is that I can just send over, like, so this week I had a day where I sent over like $140 and another day I was $180 over the buffer. So you can actually pay yourself every day with them, which is great. And there's no minimum. I had a day where I sent $50 over to it just because. So I really like them. I think they're yeah, really it's just if you really are just like I cannot do that intraday trailing drawdown on, up until the buffer on the funded account, then that would rule them out for you. Next up, we have Apex. I think they're the biggest in the industry. They definitely offer the biggest sales and they offer the most accounts with their 20 accounts, which is a huge draw for people. They also have a great profit split, the 90/10, 100% on the first 25K. The things that you're not going to like about Apex is that 30% consistency rule in the funded if that doesn't work with your trading style. Another thing I don't love about them is that their payouts are not as flexible. So it's just like there's certain payout windows during the month where you can request a payout. And then, of course, that trailing drawdown. Somebody actually told me before when I did a video about the most hated prop firm, which was Apex, that based on my trading style and how they saw me trading, that I would actually be, Apex would be a good choice for me. And I'm starting to think that they might be right because I've been trading poorly lately, wanting these bigger moves or being like, I want to figure out how to trail my stops better, which are good goals to have. But um, I don't know, maybe it would be good for me to go to Apex where it's like my consistency in my stops and my targets actually a good thing. I'm gonna mention Lucid because their pricing is competitive, they don't have activation fees, they don't have a trailing drawdown, they do have a 90-10 profit split, so a lot of good stuff there. They have a nice interface. The only downside with them is that your minimum withdrawal for the payouts is $500. So I don't love that because it's, again, putting more targets and maybe some psychological pressure. And they also have a consistency rule where no single day's profit can be more than 20% of the accumulated profits for that trading period. Um, but yeah, I have seen a lot more traders using them, and some people told me to check them out. So I am including them in the list. I do also have a code with them now because um, I looked at them and their rules and their accounts, and I thought, "This is a firm that I would use." There are a million prop firms, not actually, but there's a lot. The last one I wanna talk about is Topstep. I've used Topstep, I liked Topstep, I got 2 payouts with them. They've been around for a long time, so I feel like you can trust them. My issue with Topstep was a problem with Topstep X and entering on stops, and I really just got sick of paying those activation fees when I would pass the accounts. I do think that where Topstep is beating all the other firms is on all their risk settings that they have that you can put on to, like, lock yourself out for the day at a certain number of trades. You can set your risk that you can't trade more than a certain number of contracts. They have really good risk management features built into the platform. So I love that about Topstep. Their payout rules are not terrible at all. They have pretty good payout rules. And it's only 2 days to pass. So there's a lot of pros about Topstep still. I know that they've been having some issues with their Topstep X platform lately, but they're still definitely worth considering if you're going the prop firm route. All right. Well, this video has been way longer than I wanted to be, and I feel like I didn't cover some stuff. So please, in the comments, let me know what I missed and what prop firm do you think has the best rules? What prop firm do you use? Which one do you like the best? And which ones have you tried? I know there's so many of them. I didn't cover a whole bunch of them because, again, like we were already pretty long on the video. So let me know in the comments which prop firm do you think belongs in that top 4?